Everyone, this is Dr. Duru from Ahan Analytics with the market breadth. Well, it looks like we are off and running to an overbought summer, an extended overbought summer. I'll let you know what that means in just a second. As always, remember you can subscribe to this channel, hit the bell to get notified when I post new content, like and share so that the algorithm knows what's up. And if you have any questions or comments, put them down below. Okay. Timestamp. This is July 3rd after market closed on a holiday shortened trading day. Of course, the biggest headline is that um, the budget bill has passed. Well, both houses, both chambers of Congress. So it will be signed in time for the July 4th deadline. You can see all the other headlines are mostly about the all-time highs in the stock market, the implications of this budget bill, and of course, we had a jobs report today as well that was much stronger than anyone expected. I don't know where these expectations come from. The jobs report seems to always be more strong than expected. So, of course, there are implications for interest rates because of that. And gold dropped. All right, so let's go ahead and dive into the charts. First, we start with my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50. Now, why am I calling this the summer, the overbought summer, or maybe even the extended overbought summer? Well, one of my concerns was that the AT50 was hovering right below this overbought line. According to the AT50 trading rules, it's bearish, but of course, I did not flip bearish. As I've been saying over and over and over again, the market is well supported. There was no reason ever to flip bearish because of this. And we finally got the breakout. So each day of this week, we traded above the overbought level. And now we're going to probably test and go beyond the high that was set at 78, at 78% on a closing basis. So right now, AT50 is at 76%. And more importantly, the percentage of stocks trading above their 200-day moving averages has broken out. It's ended the last downtrend. It is now at 55%, and that is almost at the level where the S&P 500 was last trading at an all-time high. So no more yellow flag warning or caution from AT200, which is an indicator of the longer term health of market breadth. So now I am 100% all good with all my technical signals. The runway is clear, all systems go. And of course, as I say that, watch something big happen and undermine the entire bullish thesis. But anyway, for now, things look pretty good. And as just a quick reminder for my AT50 trading rules, this is a bullish development because it shows that the buying strength is remains as basically robust as can be. And it's only when AT50 drops below the overbought threshold do I start to get worried again. Okay, let's dive into the major indices. I'll flip back to logarithmic. You can see that the buying strength is on full display here with the ability of the index to just keep running up its upper Bollinger Band. That's this black line here that defines the expected price volatility on a 20-day moving basis. So that's all good. We're all clear now. You can see it just wants to run up straight. I mean, we're going to have a pullback at some point, of course. I fully expect that the 20-day moving average is going to hold as very firm support, just as it did the last time here and again the last time here. So this is what I mean by well supported. The index has fallen back several times to support levels and bounced right up. Okay, so let's not get fooled by any of the bearish signals until some important support breaks down. The NASDAQ, same thing, all-time high. It also was well supported along this 20-day moving average and other supports along the way up. So it is what I call full bull. IWM, the ETF of small caps, it also now has joined the bullish camp. It has, I mean, the full bull camp. It has broken out cleanly above its 200-day moving average breakout. So I'm very happy to see that, even though, of course, it's a little stretched above its upper Bollinger Band as well. And even if I look back now, IWM was also well supported along its 20-day moving average. So when it pulls back, and it will, I fully expect this 20-day moving average, which is the dotted line, to hold as firm support. So going forward, we'll know now what would the real signals of bearishness be, or at least a yellow flag. It's when one of these primary supports finally fails, but that is not in my base case. Let's take a quick look at the VIX. You could see it didn't drop as much as I would have expected on such bullish price action today, this week, and it still didn't quite break. It's not even at the lows of the year. That's very surprising to me. Um, so we'll keep an eye on this. This, I guess, maybe could be a mild yellow flag for the price action, but I'm not going to worry about it at all. It has room to go down essentially. So that's the way I'm going to interpret it. Okay, let's dive into some individual stocks. I talked about gold. Let's see, GLD. You can see GLD here. It did recover back above the 50-day moving average, but I wasn't excited about chasing it here. I actually already have a call spread going. It didn't fall back as far as I would have expected given the strong jobs report. So maybe gold is just going to trade in a tight range right around or above its 50-day moving average for quite some time. I don't think it has much of a catalyst to go up until or unless the US dollar drops hard because of this budget breaking budget bill. Let's take a look at the US dollar. You see, the US dollar had a little bit of a rally. This is because with the strong jobs report, it takes basically interest rate cuts off completely off the table for July and actually makes interest rate cuts in the fall a little bit more shaky because, I mean, the economy overall is strong. Yes, you can always find weak points, but for the things that the Fed cares the most about, the economy looks fine, and that's what Governor Mary Daley of San Francisco said as well. And you can read more about this on my blog at my inflation blog, Inflation Watch blog. The other blog I have, which is drduru.com/122, all letters, and that's where I go into more detail on these stock charts. Okay, let's take a look at some individual charts. This is one I wrote about, ITRON. I love the price action here. This has been a very good call for me. It broke out to all-time highs, and I just kept sitting on it. I don't have an upwards price target. I just think this is a good one to hold for the long term. This is ticker symbol ITRI. Let me pull back. You can see that this was a very choppy stock. So now that it's broken out to all-time highs, I think the run-up could be pretty substantial. I wouldn't be chasing it here, but this is just like a quick follow-up to a stock that I wrote about when I was talking about 200-day moving average breakouts and buys back in April and May. Now, because the market is fully bullish, you can still do your stock can scans and look for fresh 200-day moving breakouts as stocks that are late to the game, but they could have a lot of upside. And that's what I'm going to be focusing on this holiday weekend is to build up my stock watch list with those kinds of stocks. And again, I provide this information for educational purposes. Please trade and invest according to your own risk preferences, tolerances, and time horizons. Okay, next stock will be, let's take a look at the gambling stocks. LVS, Las Vegas Sands. This is what I mean by late to the game, but looks bullish, 200-day moving average breakout. It's of course it closed above its upper Bollinger Band 3 straight days. So I wouldn't chase it here, but hope for a pullback, any kind of pullback actually. As long as it stays above the 200-day moving average, I want to buy it. Same thing with MGM, Resorts International, ticker symbol MGM. You can see same thing. In fact, it was even stronger bounce off of its 200-day moving average. All right, Etsy. This is one I didn't expect to keep talking about, but this wild action keeps me interested. And I bought back in, refreshed my position with shares and a new call spread as it rebounded off of 50-day moving average support, which is this red line. I love the way that the two converge, the 200-day moving average and the 50-day moving average. So I think this is a pretty solid entry. The only thing I'm watching out for now is this 20-day moving average is turning down. So I expect Etsy to run into some resistance here, and I'll just see if it can break through this. If it breaks through this, and you can see there would be some resistance here as well from the previous consolidation point. But once it breaks above this point, that's about $56.62, should be a straight shot to get back to 64 and probably above. That's what I'm hoping for anyway. Nike had some good news. There's a trade deal struck with Vietnam that helps the stock, but I think more importantly, the stock, expectations for Nike were very low, ticker symbol NKE, and earnings, it soared 15.2%. I put it on my buy list. I was hoping for some sort of cool down before it proceeded to fly above the 200-day moving average. It has not come in. This is a very bullish market, so this pullback may not happen for quite some time. Let me just pull back to just show you why I was hoping for a pullback because Nike has basically been bearish since its peak and in 2021. It's just been going straight down. And so, couldn't get too excited to chase this one. But now I think it's probably in the middle of a bearish to bullish turnaround, but we'll see. Lululemon. This is one also, a retailer that basically peaked out 20. Actually, this is an interesting one because Lululemon, it had a peak of 2021, then it briefly broke out in 2023, but now it's lagging. I don't want to chase this one either, just because it has a lot of downside if it becomes like a Nike and starts turning downward. But what I was impressed to see was this constant selling and then this hammer like bottoming action led to this creep up to the 20-day moving average resistance. I never chased this. I tried to hop aboard this slide here and it didn't work out at all. So that's what I get for chasing that long selling pattern. All right, Meta platforms. This is one I highlighted on a short, a YouTube short, because there's a bunch of stocks that are big winners, and people I think have sold them to go chase beaten up stocks. And so here's an example. Meta is now lagging the NASDAQ suddenly. It gapped up above its former all-time high to set all-time high here in this area, but it did a gap and crap, which is it gapped up, sold down, and now it followed through. So I'm not going to say Meta is bearish, but I also don't want to buy it. I just think that this is a sign of people taking some profits and putting their money elsewhere where there could be more potential upside. But I just wanted to flag this because it's a sign of what's been going on. First Solar, my goodness, really surprised me. This stock has just been wild. And even with I guess the news wasn't as bad as people feared in the budget bill. And the green energy tax credits, I guess, aren't going to expire for some time. I had to look into more details, but the trading action tells you everything. First Solar is looking bullish again because it not only broke out above its 200-day moving average, it broke out above the previous high from which it gapped down on bad budget news. So now all it needs to do is pop above this area here, and it could be off to the races. I was hoping this would be a contrarian play I could buy into in another year or two, but I made this bullish pricing action could force my hand. This is a bearish, starting to become a bearish to bullish reversal. Even more bullish is the ETF of solar stocks. You can see TAN, the ticker symbol TAN. It teased the technicals with a tap here on the 200-day moving average, another small breakout here in June, and then a full on breakout here with a confirmed move. And it's now at 38.73 with 3 consecutive days above the 200-day moving average. That's pretty impressive. So before I go into First Solar, I'm probably going to buy 10. I just need it to cool down just a little bit and I'll buy into it. So we'll see what happens in the coming days, coming weeks. All right, we're almost done here. I have one more. Oh, yes, spot. This is interesting because this is another big winner that fell down. Now, it had a clean break to all-time highs and just kept rallying. In fact, it hit a fresh all-time high way back in May. So this is one I'm probably going to buy and just hold. And particularly if it can come down to the 50-day moving average as support, I want to buy and hold it. But you can see here this pullback for 4 days actually, and then a really big one on Tuesday when the stock market was hitting its first all-time highs says a lot about the rotation, the mild rotation that's been going on in the stock market. All right, well, that is all for the charts. Again, if you have any questions or comments, feedback, just put them down below. Otherwise, I will check you out later. Have a good holiday week for those of you in the US. Take it easy.